Welcome everyone to the second day of Monaco Ocean Week, and thank you for joining us for today's discussion about investing for a sustainable blue economy. Yesterday was the 12th edition of the Monaco Blue Initiative. It provided a unique opportunity to hear from major global stakeholders in the ocean conversation about governance and key challenges facing the future of our oceans. Today, we take a step forward to discuss the actions for that vision and how we can move this forward, particularly for private investors who can engage with the emerging technologies, business models, and investment products to deploy capital for sustainable ocean economy. My name is Damian Piatakis. I head up the sustainable and impact investing efforts at Barclays, sitting within our private bank. On a day-to-day, I work with individuals and families and family offices, helping them to navigate this world of sustainable investing, as well as our investment teams to find or develop high-quality impact investment products. But today, I'm here actually on behalf of another initiative that we're supporting called Impact Agora. Let me introduce Impact Agora before we get going and a little bit about the connectivity with the session today. So Impact Agora has been established to be the institutional marketplace for early stage impact investing. To give you some context, while the topic has been given increasing interest across a number of stakeholders and certainly the media, it still remains difficult, especially at an early stage, to provide scale and capital. And certainly in the conversations I've always had with others, I kept on hearing familiar gripes. The aspect that these actors that you see on the screen find it difficult to navigate the market, that is very fragmented, but oftentimes there's a struggle for new entrants to access the market and obviously to maintain the integrity of impact as we go forward. So in order to address that, we decided to partner with Delio, whose technology we use within Barclays as well as other major global financial services institutions to digitize sort of an end-to-end private investment marketplace and really to take action. Now, Impact Agora is a community of member institutions that can share deals and funds with each other. And if we go forward, you can see it works actually fairly simply, where you have a relationship with the member, and those members put forward opportunities that are seen on a central hub. And from that central hub, investors can either directly connect with the other intermediaries, the other members, or oftentimes they actually have their own networks and their own investment communities with whom they can share these opportunities. Now, last year, just as the pandemic took hold, we canceled our physical event, but decided to still launch the platform, and certainly glad I did, in the sense that we'd probably still be waiting to do the physical event. In just under a year, Impact Agora has gained traction with over 80 members from 12 countries. And as you can see, these members are intermediaries and institutional players, often well known in the impact investing space, and about half of them are investor members who manage a total of $140 billion worth of capital. We thus far have showcased 45 opportunities. 60% of those are direct, worth about $260 million, and about 40% are funds worth about $1.1 billion. Now, during the pandemic, the technology platforms like this allow us to reach across and connect across traditional physical boundaries, really to showcase a breadth of opportunities. Now, really helping us to keep capital flowing while at the same time enabling new and existing players to find and connect with the deals that you see here on this slide. Often really focused again on that early stage. And while I would say we do have a breadth of opportunities with about 60% environmental and 40% social, we've always known that it would also provide us a really interesting and exciting opportunity to go deep into specific themes, sectors, and geographies. And obviously, if there's one area that is deep, it is the ocean. And for those of you that are unfamiliar, let's talk about Monaco Ocean Week and the connectivity that we have there. Very clearly, the marine ecosystem has been part of the Principality since throughout its history and heritage. Prince Albert I was one of the modern founders of oceanography, and His Serene Highness Prince Albert II, with the launch of this foundation nearly 15 years ago, really set out to protect the environment and promote sustainable development at a global scale. Now, with Monaco Ocean Week in its fourth iteration, we really are convening more and more of the organizations, as it has always done in terms of the scientific and the governmental and the NGO community. But what was very exciting this year was being able to work with the foundation as it has extended more actively into the financial services community, which is why Barclays Private Bank is supporting this year's conference, which hopefully connects all the different dots together in terms of why we're having this session today. But before we move on, I'd like to put our ask out there, clear at the front. we do hope you take away some very interesting insights and some education around this topic, around challenges and opportunities. Having spent a bit of time with the panelists, I'm confident that that will happen without a doubt. And through Impact Agora, what we're really hoping is to deepen and expand our activity in building the sustainable blue ocean economy. We would like the session to hopefully inspire and be a starting point to mobilize and catalyze and convene more actors, new opportunities and capital in this space. So my ask, in terms of the time that you're spending today, is please reach out and follow Impact Agora or join us. Please share your information or the information you hear today with other investors who you know are active in this space, and please help us to raise visibility. It is one of the most frustrating and tragic things that, given the importance of the ocean has, that the financial capital that supports its critical role is not really at the scale that it should be. Now, to help articulate that much more effectively than I can, let me turn over to Olivier, who's the CEO of His Serene Highness's Prince Albert II's Monaco Foundation. Olivier.
Thank you very much, Damien, and distinguished guests and participants. It is indeed my great pleasure to participate in this session dedicated to investing in a sustainable blue economy. It's organized by our co-sponsor Barclays Private Bank, Impact Agora, and the Prince Albert II of Monaco Foundation. I must say that I do deeply regret the fact that we cannot meet face-to-face today, but I'm glad that this session could take place during the Monaco Ocean Week. So thank you once again for this organization. It was indeed particularly meaningful for us to include and strengthen the Ocean Week program with sessions dedicated to blue economy, innovation, startups, and blue finance. For us, it is central since the climate, ocean, and biodiversity crisis requires the commitment of companies, of course, but also deep investments, both in volume and on the long term. Therefore, finance is pivotal in this equation, but one may understand that without a collective and holistic approach, bringing together science, the public sector, the private sector, this challenge will not be met. So in a world that is experiencing now a post-COVID-19 recovery, or beginning to experience this, the reorientation of conventional financing towards more sustainable development pathways is needed to achieve the scale of positive change. And indeed, a healthy ocean is central in our fight to mitigate climate change and vital to ensuring ongoing biodiversity. The seas, as you may know, are equivalent to the world's 7th largest economy, providing each year $2.5 trillion to the world's economy. 250 million people directly depend on the ocean, and already 60 million people just for fisheries. However, as you may know too, despite being one of the UN's Sustainable Development Goals, the SDG 14, despite the Paris Agreement, and besides knowing that the climate and ocean are the two sides of the same coin, conservation of the ocean and sustainable use of its resources has attracted so far just 3.5% of overall investment. Yet, sustainable investment projects can play a crucial role in helping to reabsorb excess savings and raise growth potential, while also setting out a growth path that reduces social vulnerabilities and counteracts climate and other environmental risks. With investment, we can therefore restore natural ocean systems, replenish and diminish fishing stock, harness the ocean's carbon capturing potential. And of course, the lower cost of capital compared to traditional investments, this could encourage the launch of new sustainable projects. In parallel, it would be unrealistic to imagine that the huge volume of investment needed to ensure this sustainable ocean policy can take place without the involvement of the public sector. I'll give you two examples. The first one could be regarding the raise needed of the price of coal, for instance. The second example could be the public sector is required to support research and development of alternative energy resources. So in order to boost the contribution made by sustainable finance, the financial instruments offered to investors must also be trustworthy and easy to understand. So here too, public sector involvement, in particular effective regulation, is highly necessary. Lastly, the development of sustainable finance requires global cooperation, since the impact of climate change knows no boundaries. It also needs coordination. Coordination is indeed necessary in order to adopt a common set of rules and practices that will enable new behaviors and that will make sure that blue finance goes where it's needed most. So this is the objective of today's session and discussions with our expert panelists. I will sum up some of the pressing challenges and objectives to tap into the growth potential of the blue economy. So first of all, investing in scientific data and technology to underpin governance reforms and shape new management decisions to define best investment opportunities on the long term. Second, the tensions on the ocean cause externalities that needs to be internalized. That would also mean giving a value to the services that nature provides to humanity. Third, improve governance to create a pipeline of investable in a way that benefits national economies and local communities. Fourth, with improved governance and incentives, we can definitely align natural capital with investment capital. Fifth, define the most relevant entry points for investors and growth opportunities. I have selected quite a few this morning, which I think we can tackle later on our discussion. First one would be energy. The second one being fisheries. And just to give you a bit of, some figures there, 2,300 marine species are now endangered or threatened of extinction, according to the IUCN. 75% of the world's fishing resources is in advanced decline, and 10 million tons of fish is dumped back into the ocean every year by the industrial fisheries. And the cost of illegal fishing represents already $35.4 billion annually. A third point of interest would be aquaculture. There too, today, 80% of the protein that humans consume on a daily basis is coming from the sea. A fourth point could be coral reef protection. Today, 1 billion people on the planet directly depend on the coral reef health. And 90% of the coral reefs over the globe are now threatened of extinction by 2030, which means tomorrow. Another point of interest would definitely be shipping, since today 90% of worldwide transportation is maritime-based. Another point is definitely plastics, and the figures are very tragic here. So if I say 140 million tons of plastic are in the sea today, I can compare this, and this study made me laugh because it represents the equivalent roughly of 1 million blue whales in terms of volume. More worrying, 20% to 77%, so it's a rough idea. So a rough idea of the fish found on the markets that would contain microplastics, so between 20 and 77% on worldwide markets. And my last point for today could be, because it brings also a positive message, tourism and ecotourism. So I believe that if we use wisely sustainable finance, we can therefore help a transition from a crisis with dramatic implications to an exceptional opportunity for progress. But to do so, we definitely need to be bold and forward-looking in seizing all the opportunities that are today available and just waiting to be implemented. So once again, thank you very much for our panelists to have joined us today in this session. And over to you, Damien.
Thank you so much, Olivier, for the excellent introduction and really framing both the challenge and the opportunity that we have. For our panel today, we're going to cover out in three big parts before I introduce our participants. The first one is really trying to, again, delve into the why this should be an opportunity on investors' radars. The second is to think about some of the sectors, and you've highlighted some of the great ones already for us. And lastly, is to go into the detail, really to understand some of the opportunities and challenges around being able to take action as an investor. Let me start just by introducing all of the panel members that we have today, and then we'll get immediately into the questions. Obviously, we are going to be taking questions throughout. Please feel free to add them into the chat box. I will try to take them as we're going through, but we certainly do have time, about 10 minutes, to be able to have some good conversation and good questions from the audience. So first up, Jamie. Jamie joins us from Sky Ocean Ventures, which is a fund focused really on investing in the new science and technology development, particularly around ocean plastics, as Olivier has just highlighted some of the challenges there. There he leads the fund's investment process and portfolio management, really identifying those early stage and exciting companies that are active in this space. Part of that, he has experience with 4 different venture capital funds and including raising capital for 2 of them, and as well has been a founder himself and continues to be involved with 2 different businesses in the UK. John Willis is the Director of Research at Planet Tracker, which was created by the founders of Carbon Tracker. Launched in 2018, Planet Tracker really is a non-profit financial think tank which investigates the market failures related to environmental limits and where our development is going. Current topics include oceans, hence the reason here, food and land use, as well as plastics and materials and textiles. John has spent time both on the buy side and the sell side in past life and ended up as the global head of equity research at Deutsche, as well as the head of trading and securities and lending there as well. Subsequently, he also founded a boutique sustainable asset manager with a range of equity funds and joined Planet Tracker earlier last year. Dr. Napoli is the head of environmental economics at the Scientific Center for Monaco. Originally an economist by training, she actually ended up spending some time being a hedge fund strategist and eventually moved into environmental research, completing her PhD in 2011. This link to research has carried on certainly in terms of the socioeconomic impacts of ocean acidification, research that she has conducted with the IAEA. Spoiler alert, obviously not a good outcome, but I think more importantly is the model that she proposed on how to address these issues systemically across the different actors. Most impressively for us today, I think she's the lead author for the IPCC's special report on ocean and cryosphere in a changing climate, as well as the forthcoming assessment report AR6 that we have. And lastly, and certainly not least by any stretch, Inna is the co-founder of and CEO of the Swedish-Israeli energy company EcoWave Power, which has developed patented and reliable, cost-effective technology to turn ocean and sea waves into clean electricity. She founded EcoWave in 2011 at the age of 24 and was recently chosen as one of the 100 most influential individuals in the world by media.com. She's delivered multiple TEDx speeches, featured in numerous documentaries, and is a leading list of multiple entrepreneurs. EcoWave is actually the first Israeli company listed on the NASDAQ Stockholm, and actually recently announced plans to list on the US NASDAQ as well. I'm also very pleased to say that she is a participant in Unreasonable Impact, as well as EcoWave and Sky being members of Impact Agora. So let me start off with the panel discussion. And Jamie, let me come to you first, although we'll go around to everyone very quickly. You are representing for us to some extent the investor views. Why would you say that investors should be interested in the blue or ocean economy?
Well, thank you for having me today. And yes, I think I can point to the lens of one of the opportunities that was highlighted here around plastics and the impact it's having not just on the ocean, but up the value chain through to our, the food we're consuming. So the ocean is a great resource, but it's also something incredibly mismanaged. And I think where you're seeing now is a collective awareness around these issues increasingly. Topics like plastics being one of the most, I guess, pressing and probably the fastest to rise in general awareness. And so from my perspective and our perspective, that presents an impact investment opportunity. This presents opportunities for corporates to change, for supply chains to change, for government policy to change. And that requires huge amounts of innovation. So from our perspective, that's where we see a great opportunity at the earliest stages.
Excellent. So early stage opportunities to be able to really have additionality, to be able to bring some additionality and some change into the space. Now, let's talk for you in terms of from the economic value that Olivier had mentioned before to the financial value and where you're seeing there should be a greater interest for investors to be involved in this space. Nathalie, I think you may still be on mute.
Sorry. Yeah, it's important to give a value to the ecosystem services because the sustainability of our economic system very much depends on the sustainability of the ecosystem and biodiversity. And the presumption that nature is abundant and is there for the taking that permeated our thinking, our economic system. This belief has led to an extractive approach towards nature as well as to polluting our land, air, and our oceans, ultimately resulting in the climate crisis that has befallen us all. When something is assumed to be free and abundant, it's usually assumed to have a price of zero in our market system. Thus, the value of nature to our own well-being has not been taken into consideration in our financial or economic systems. But we have come to find out the hard way that nature is neither free nor limitless. With the climate crisis looming, we need to act now if we are to avoid risking our own existence. The first step in a system like ours is to understand better the link between nature and our own health and wealth. Recently, science has shown us that nature provides ecosystem services that are valuable to our own well-being and economic life. For example, phytoplankton, microscopic organisms that live in the ocean, captured about 30% of all CO2 emitted per year. That is equivalent to CO2 captured by 4 Amazon forests per year, and return over 50% of all oxygen we breathe. That is either other breath we take. Yet phytoplankton has a price of zero in our market system. But this is not
Nathalie,
fair.
Thank you. I think that's a great start. And even into the next section in terms of seeing where there's some opportunities. Let me just go on to Inna in terms of, again, a very practical and real-life example. Obviously, investors being interested in the blue ocean economy could be eco-wave or it could be other things. Why do you think, in general, from what you've seen, investors should be interested in the sector overall?
I think the ocean is a huge source of resources. It's a source of food, it's a source of energy. It can really provide a lot of people that mankind, that all of us need. We can't live without our oceans. And that's what makes it a great place for investment. Not only that when investors come into that space, they can kind of take care of this resource and do something good for the next generations and even for our generation, but also it's a great source of revenues, it's a great source of income, provided that you develop a proper industry around it. And yes, I think that over the years, especially if we're looking at the energy industry, wave energy, specifically to my field, was kind of overlooked because the solar industry and the wind industry, they got commercialized very early on, like many years ago. So people started saying, okay, we have these sources. Why do we even need wave energy? It requires a lot of R&D and it requires a lot of development work. Like, do we actually need it? But the answer is definitely yes, because according to the World Energy Council, wave energy can produce twice the amount of electricity that the world produces now, and 2/3 of the world population are living on the coastline, which makes them directly dependent on the ocean in ways that they don't even think of yet. So that's why I think that the ocean for many industry is key, and investing in ocean industries is key as well.
It's a great point that you make in terms of, to some extent, being overlooked, and Olivier had pointed to that earlier on. John, let me come to you last. In terms of your views, where, again, the natural capital aspect of things, or more importantly, more generally, from your old investor hat, why would you say an investor should be interested in the blue or ocean economy?
Thank you very much indeed, and a big thank you for inviting me to this fantastic panel. I'm going to probably oversimplify things, Damien, but I think there are two major issues that investors can think about and why they should be attracted to the ocean economy. And I have to say, all speakers have picked up on this, so you could say I'm cheating. I think the first point, if you have an investor hat on, is simply diversification. So we've already heard it can be seafood, it can be ports, it can be maritime transport, it can be tourism, it can be renewable energy, it can be any of those a part of a sustainable ocean economy. And as we heard from Jamie at the beginning, also the effects of these, and unfortunately they can be very negative, such as plastics. So I think there's diversification. But the second thing that I think is so promising that Olivier picked up on is that actually by investing in this area, there is a possible win-win. And what I mean by investing in this diverse set of options, you can make an impact. This is still perceived as a new area. So what is better than having a diversified portfolio on which you can also have a positive environmental impact?
Excellent. Well, thank you very much for that. Let me move on actually to the next set of questions that we were asking. And I think Olivier has done a great job in terms of framing some of those opportunities for us in relation to that list that we see, certainly that we heard today, the Turning the Tide report as well, you know, a variety of different opportunity sectors. But let's talk more specifically about attractive opportunities and not to go quite back around, but Jamie, just to come back to you, right? Why plastics? Where and how does that have an impact on us? And more interestingly, I think also in relation to what happens on land, the terrestrial aspects of things and its relationship also to the oceans as well.
Yeah, I'd love to say, so the fund that we invest out of is called Sky Ocean Ventures. Obviously, this is part of Sky Media Group, and Sky as a corporation and a media company has had a campaign around ocean health for the last 4 or 5 years, and this we're a sub part of that. But the ocean is a misnomer in our name, really, because the investments we've made we've done 25 companies, early stage companies, over the last 3 years are all really land-based solutions. And we are looking at the systemic issues in the plastics value chain. But the ultimate symptom of that is the amount of ocean plastic that's currently leaking. And so, you know, we look at, you know, there's a range of opportunities, and even in the plastic subfield of the ocean opportunity, one can diversify across it, because in the same way that we understand the climate crisis and we understand now the pathways that we need to take as a society to make those changes, we know the same with plastics. We know the issues. We know that we need to recycle more. We know we need to replace materials that have you know, non-benign end of life. We know we need to use less. And so therefore there are technologies, business models, innovations across that whole supply chain that one can invest in. And assuming you apply the lens of, you know, good impact investment, which is trying to extract the sustainability benefit from your investment decision and say, is this something the consumer will adopt, or your end user will adopt? We see some really interesting opportunities to reformat the way we do things.
Indeed, and I think that idea of reformatting is an important one, especially when we look at traditional industries. So, John, you know, you guys have written some research around fisheries, both commercial fishing and aquaculture. Again, just let's continue on that theme of the terrestrial and the oceanic in terms of the relationship between the two. And we talked a little bit about food security as well. Can you bring to life that aspect of where there's investment opportunities in that fishery space?
Yeah, thank you. It may be best, Damien, if I actually go through an example that we're living through, because I think that makes it real for everyone. So I am very, very sympathetic, and we all are at Planet Tracker, about sort of viewing the oceans as distinct is somewhat misleading, because nature doesn't make those distinctions. So let me run through an example. The example is that effectively we overfish the oceans. Olivier gave some details early on about effectively under 10% of the oceans now are underfished. So what did that mean? Our response as humans, as if we're distinct from nature, but we're not, we're part of nature, was, well, that's fine, we'll start fish farming. Sounds like a very good solution. And we're now approaching, we're not quite there, 50-50. Where you have wild catch and you have aquaculture. So we found a solution. The problem was we didn't. And the reason is because it resulted in very localized pollution, and we had to feed those fish. Where were we feeding those fish from? From the oceans. The price goes up and we think, well, that's not sustainable, so we'll look for another option. What did we do? We went and found soy. This was the magic solution because that was cheaper. The problem was the soy then led to deforestation. I've now got a problem back on the land. So now what do I do? I've got to look for another solution, and the solution is possibly, obviously one of the favorites at the moment is scaling up insects. But what do I do about the fish farms which are causing pollution on inland waters? Well, what I start to do is move them further from the coast to get the benefit of the currents. And now we're looking at a situation, and there's a lot of investment looking at this area. Do I now move the aquaculture back onto the land and have recirculating systems? The two are absolutely joined up, and it's a great example of human ingenuity versus nature. And every time we start sort of reaching nature's boundaries, we've got to continue to innovate. And the big question is, can we continue to innovate against these natural constraints?
Yeah, thank you for that. And I do think it's a telling tale to see how we continue to push the boundaries and end up in the next place that we have to address. Natalie, you actually dealt with that a little bit, I think, when I was looking at the socioeconomic impacts of the acidification and thinking about where coastal communities and the tourism that affects them come together. For an investor, though, how can you think about investing in things like tourism or conservation finance? Where's the opportunity there?
Yeah, tourism, as Olivier said, it will be interesting to invest in ecotourism. The problem with the climate change that the ice is melting, for example, in the Arctic, and this will create new routes for the cruises. And you can imagine that those cruises will be polluting the sea also. So the impact of climate change can be positive economically speaking, because we will have new cruises and new routes for the maritime transportation, shipping. But on the other hand, it will be also polluting. So it should be very careful. We should be very careful when we invest, because if we invest in the blue economy, it's not always sustainable.
Yeah. And Olivier,
sorry, just a couple of, yeah, I'm sorry, just to interfere, but a couple of seconds to complete what Natalie has just mentioned, because this is so true. And here at the foundation, and I know, guys, you're probably doing the same, we believe that one of the key points when tackling ecotourism could be marine protected areas, because it's a triple win. You protect biodiversity, you reduce the catch in terms of fishing, and you promote whale watching or activities linked with the sea. So I believe that there is a path for ecotourism that can be a triple win for nature, investors, and economists.
Mm-hmm.
Excellent. Thank you, Olivier. Let me come to you. I mean, you touched on it. Most people would expect, we've got renewable power sorted. Why would we bother looking at new technologies such as wave or tidal? What's the advantage of doing that?
Mm-hmm. So first of all, although renewable energy is very high on the agenda, we open any news channel and we see somebody speaking about renewable energy and impact investment. Unfortunately, still only 18%, 1/8 of the world's energy is produced by renewable energy. That means that 82% are still being produced by polluting sources such as oil and coal. So we're definitely talking about it enough, but we're not doing enough. And one of the reasons that I think that we're struggling to do enough is because we're relying on several renewable energy sources which have proved themselves, which we know that are working, and are failing to kind of open for additional large-scale renewable energy sources. Because some countries, for solar energy, let's say, is an amazing source, but some countries, they don't have so much sun. Let's say Sweden, where we're publicly traded, like to try to harness the energy from the sun there is pretty difficult. I'm calling right now from Tel Aviv, Israel. Here, the sun is amazing. You can generate throughout the whole day. Only at night you stop generating. So each renewable energy source has certain hours or months a day where it's mostly dominant. So really, we need to have a big variety of different renewable energy sources working together in order to get a 100% renewable energy friendly world. And right now, 60% of the, according to the United Nations, 60% of the global pollution is caused by the way that we're harnessing and producing our electricity. So really, I think that these kind of facts on their own explain the need to invest in new energy sources. And in that regard, there's something that I really wanted to add by saying that, sorry, for some reason, renewable energy investors are kind of different type of investors than what we're seeing in other industry. Let's say in the medical industry, investors are really keen to invest in the most innovative, the most pioneering, revolutionary, untested medicine. Same with the software. We want the newest software. We hope, something that sounds super strange that was invented today will be worth $1 billion in 2 or 3 years. But in renewable energy and infrastructure, the investors have different expectations. They want to invest more in the proven, in the old, in something that is already kind of existent. And that really prevents new renewable energy projects, which are good, from commercializing, because at the time that they need the money the most, by the way, same happened to solar and wind. When they were actually R&D and developing, they were very struggling to get the funds. But when actually they commercialized and now the banks are giving the funding, now all the VCs, the pension funds, everybody want to invest with them. So that's kind of something that I think that needs to change in order for us to see more innovative technologies in the renewable energy sector.
Thank you, Inna. Excellent. That moves us on really nicely and starts to answer that last question that we had. I mean, Olivia made a comment to me when we're speaking in advance that most or all of the solutions exist. Why are investors slow to deploy capital in this space? It's a question that we wonder about, and I think that risk averseness around technology or new technologies in this space is an interesting one to see. Jamie, you guys are involved in that earlier stage space. Why is it that you think, what do you think it would be to engage more? What's missing from getting more investors into the earlier stage of the ocean economy?
I think it's a good question. I think it's a function of ecosystem development. Great actors like the Monaco Principality that can coalesce people who have a nexus to the ocean to start thinking about the opportunities there. I would love to say that it was as simple as that kind of mentality, but it's also a function of returns and outcomes. And so where can we see the Tesla of the ocean, or that kind of outcome that's going to start to stimulate broader awareness. But I think it's a function of early market leaders putting risk capital to work, understanding the systemic problems that face the ocean, but really thinking hard about those opportunities, and trying to translate that to a broader audience, which is what we're all trying to do here, is to explain why we feel very confidently in the opportunities presented. So, it's a combination of factors, but I think we need more activity, more awareness, and more kind of, I guess, dipping the toe into the ocean, to use a pun, really dipping the toe into the ocean of this kind of space to really kind of explain that to a broader audience.
And a very slightly cheeky question to you, obviously, but Impact Agora, you guys are members and joined. Can you tell me a little bit about why you did that and how the experience has been thus far?
Yeah, I mean, look, we operate in the early stage investment ecosystem, which I appreciate most institutional investors will recognize is incredibly fragmented, and it's not a perfect market. It's a lot of institutional relationships required, and there's time and effort to go into fund managers going and spending the time to find amazing opportunities like Inna's companies, and going to search these early stage companies. I think Impact Agora is doing the right thing about providing transparency and ease of access, and we already operate great marketplaces across digitally enabled marketplaces across huge swathes of our society already. And so there's no reason that early stage investment can't be done in that same capacity, and it will be a function of continuing to develop it. We've seen really interesting things coming through already, and I'm very positive that as you guys scale and get more interest on both sides of the market, from opportunities to investors, it can provide a meaningful a platform for that. And I think also providing that lens around the impact investment, kind of what's best practice, what are the best measurement methodologies, how do you think about it, how do you quantify it, consistent frameworks, is really important too, to avoid, the inevitable issues that some investors kind of make around this type of investing, where they don't understand the non-financial metrics.
Thank you very much, Jimmy. And glad that you guys are finding it useful, certainly. John, let me talk about one of the other fragmentations or issues, obviously market data and market information. Do you think that's part of the reason why investors are slow to deploy capital in this space, in terms of they just don't have the right information? Or what do you think would help move them forward in terms of being able to provide more capital with more confidence and more scale?
Yeah, thank you for that, Damien. So I would have to agree with Jamie that probably number one is awareness, but there's always innovators out there. There's always people sort of happy to sort of go out in front. So I do think the second issue is to do with frameworks. And if we sort of look at timing here, it's worth recalling that UNEP FI has only just recently released an excellent document called Rising Tide about the frameworks to exactly help investors navigate, sorry, that's a cliche, but navigate this area, if you like. And with that, with frameworks, and you can see what's going on in the EU, there's a lot of focus on definitions. Now, partly that can be an excuse. If you wait for the perfect data, you will never invest. So if we were still waiting for the perfect data, we wouldn't be investing in climate change now. So let's be realistic. And that demand pushes the need for that data. I think the other two things very quickly is the oceans are, and we've sort of heard it from everyone, are in a state of transition. Is this energy transition? And they're playing a vital part in that. Is it food transition? I mentioned, changes in aquaculture. What about the lab base that's appearing? And transition is a high risk, but it can be high reward. So people often go quite cautiously. And I think the final thing is just new financial vehicles coming out. So again, look at the timing. If you look at the first green bonds, they were called that were issued to fishing companies, that actually happened last year. So this is a really new area, but it's an exciting area.
Yeah. Now, let me come to you. Thank you for being patient with us, but also on that issue of data, right? As an economist by background, doing all the research that you're doing, help us to understand where and how, to John's challenge, do we need perfect data in order to move this forward? Or what role do we have in terms of the science giving us enough in order to take action, or pointing to where we more clearly should take action?
I think the financial markets and the financial institutions should invest in using science. Science is really important. All the information or the data gathered should be science-based, because it's really important to understand where you are investing. We spoke about energy. If because of climate change, the ice in the Arctic are melting, and 15% of the oil world reserve are in the Arctic, and 30% of the gas world reserve are in the Arctic. If you are going to invest and only think economically or financially profitability, you will invest in the fossil fuel. So it's important to consider climate change, because the science is behind explaining us what we should do. And this is why it's important to invest in offshore winds, in tides, ocean currents, thermal gradient, wave salinity gradient, and also in algal biofuels. And this is really important to understand what science is telling us, and then go in and invest in the right place. And the same for the health. If we consider bioprospection and medical resources in the ocean, we have many marine organisms that are screened for new drugs due to their antibacterial, immunomodulator, antifungal, anti-inflammatory, anti-cancer, antimicrobial, neuroprotective, analgesic, and anti-malaria properties. So this is science who is telling us, and it is important to link the two worlds, the world of science, the world of economics, and the financial world, of course.
It's a great point in terms of the breadth and opportunity, again, that we continue to see and hear about from the ocean economy. Let me come to you for one final question, and hopefully we can open up to the audience for more questions to bring this to life and bring your questions in. You're sitting, as it were, on the front lines with dealing with investors more specifically. What do you wish they knew? What do you wish they understood more about the ocean economy and the opportunity there, or the type of investment that they're going to be making?
I think the most important is that they knew that wave energy is something that exists, because I know it sounds obvious, but many times when we come with our solution to some country or a port or investors, they go, wow, we didn't know it's even happening. Really, you have a working power station in Gibraltar? We thought it was just a dream and like an aspiration. So really, I think to educate themselves more about different types of technologies, to understand that again, although the risk when you're developing a new technology is higher than, of course, investing in an existing technology, the potential is also so much bigger. As I said in the beginning, the World Energy Council estimates that wave energy alone can produce twice the amount of electricity that the world produces now. All of us, we have a big many of the countries have very large coastlines, so you don't need really expensive real estate in order to implement wave energy. For example, look at the municipality, at the Principality of Monaco. It's a bit difficult to put their wind turbines, let's say, because of the space limitation. Solar, you can do huge solar farms, maybe only on the roofs of the buildings, right? Because you don't want to block the expensive real estate that you have with different type of farms. But the ocean is something that is very immense. You have a lot of breakwaters that the floaters can connect to. So same happened to us in Gibraltar, where Gibraltar really wanted to have renewable energy, and the government there is very committed. They have a very abundant resource of water, of ocean around them, but they actually don't have a lot of land space. So it can be suitable for many locations. Again, ocean is something that is worth the investors' attention. Again, I'm from the energy industry, but not only in that, in the food industry, in transportation, in anything, it has a very, very high potential, high growth potential financially, and high impact potential. And it's very rare, I think, in our world when we get a chance to invest in something, but also doing something good. It's not only, cold and for profit, but it's actually also doing something good for the world and for our children. So that's why I think that ocean energy is, and ocean on its own is very important.
Yeah, thank you for that. And actually, one of the things that we've said, and if I put on my Barclays hat for the moment in terms of advising clients, when we're looking at short and medium-term returns from a market, they are going to be challenged with a number of issues in terms of volatility. And for us, when we're talking to investors about long-term growth and where and how they can preserve and grow their wealth, the reality is some of the biggest challenges we face are actually some of the biggest markets, and the companies who can commercially address those often provide really disproportionate alpha generation for investors' portfolios. Again, with the right willingness and risk appetite to be able to do that, but definitely of interest. I do want to try to open up the questions. I'm not sure if that is working or not, but can we try to see if we can get some questions in from the audience? I'll pause for a second and see if we get any in now. Well, Olivier, apologies, can you see anything coming in from your side?
I don't.
I don't, okay. Apologies, we may be having some technical difficulties, so let me continue on with the conversation, but hopefully we will have some time.
Damien, just continue and I will check.
Thank you very much. Appreciate the technical assistance. Let me just continue on with the conversation. We were talking about why investors should be deploying capital and what may be missing from that side of things. John, let me come back to you. I mean, we talked about this a little bit in terms of, again, going back to the idea actually of food security and this connection between, actually I saw somebody call it a turquoise economy, sort of this connection between the terrestrial and the oceanic. I'm very curious to get your views on how investors can start to frame and understand where opportunities are by connecting it to their daily lives and the things that they may be seeing in their countries.
Yeah, thank you, Damien. I think that's a really interesting point you're raising, because I think that a lot of the blue economy at the moment is actually being framed in climate change terms. And I'm not saying that climate change isn't highly relevant, but what I wouldn't do is demote the food security side of things. Let's be honest about this. We want to be able to feed ourselves. It's rather important to our existence. So I would absolutely encourage people, particularly investors, when looking for opportunities, don't just look at climate change, as important as it is, look at the food security. And I think the debate going forward will be whether this food security issue becomes the next big geopolitical issue.
Yeah, it's a great point. It's a great point. And let me just say, I've gotten some questions in actually from some colleagues online. One question for Jamie, actually. Can you give some examples of investments you've made recently? Some specifics, just 2 or 3 that you've made.
Yeah, absolutely. The most recent investment we closed was an early stage company based here in the UK called Grey Parrot. They develop machine vision technology, so advanced artificial intelligence technologies to effectively be able to identify and characterize waste as it flows through material recovery facilities. Why that's important? Traditionally, our mechanical recycling facilities, which are the 90% of the proportion of kind of waste management and attempted recycling around the world, operate in the dark without data. They are and very low efficiency. So this is applying a modern technique to a very, very old industry, which with low digitization to enable them to improve their yield and their audit flows. Ultimately, that flows through to the EBITDA of the MRF. Another investment recently that we made that's still actually in stealth, we haven't announced the company, is a company that's developing enzymatic approaches to recycling of plastics. So you've got that mechanical system, you have a traditional chemical system. Biology has an approach. We think of plastics as non-biodegradable, but there are organisms that exist in the world that can break them down. So applying modern synthetic biology techniques to the optimization of enzymes is what this company will be looking to do, and it's really exciting.
Yeah, definitely very exciting. And actually looking, we did a separate conversation around circular economy and thinking about good materials as a starting point. Bill McDonough, who really founded the whole movement, talking about good materials as the primary practice when we're starting to think about these things. Let me actually just continue on plastics. And John, let me come to you, because I think just given the other research you guys are doing, you might have a view on this. In terms of investor support for the new global treaty on plastics, do you think they have the information in order to make informed decisions around that?
I think there's plenty of information around. I think what is worrying for investors is that it's not being declared at a risk. So we've done scanning, for example, of all regulatory filings. And if you go to a group pretty clearly identifiable of, it's about 80, it's just over 80 plastic container and producer companies, five of them declare a risk in terms of waste. I've got to say, we do as Planet Tracker, we struggle with that, because that is effectively your legal advisors are not telling you to declare this as an investor risk. And surely it must be, or you are completely relying on the sort of technology, and I really hope that this technology works and can be scalable that Jamie's talking about, because otherwise you simply look at the policies coming in place, something has to happen. It has to go through a transition.
Fantastic. I think we're almost out of time, and I do want to come back to everybody on the panel. There were a couple of very nice questions coming through, so apologies that we haven't had time for some of those as well. Let me just go around everybody and just ask for one piece of advice that you might give to investors who are looking to get started. Nathalie, let me come to you first in terms of what one piece of advice would you give to those who were interested in moving forward past this session in terms of getting involved? Natalie, I think you're on mute still, please.
Yes, sorry.
Thank you.
Yeah, if I would say something, I would tell the investor to invest in the conservation of biodiversity. I would specifically like to mention coral reefs, which are studied in the Scientific Center of Monaco. And because also coral reefs provide ecosystem services like fisheries, tourism, and are natural protectors for plants. They also provide cultural and recreational ecosystem services and biomaterials for human health. So they can be very interesting for investors. And in Monaco, we have recently a global fund for coral reefs. So I think it is really an important biodiversity place to invest.
Excellent. Thank you very much. Inna, let me come to you next.
So my answer will be short. Invest in the most innovative, in the most revolutionary companies and technologies that you can find, because these are the ones that are really going to change the world.
Excellent. Excellent. Thank you. Jamie.
I would echo that. I would say there's a great amount of literature around just that explains these themes. I would start with some of these conversations as well. And there are some interesting early stage fund managers. We don't raise capital. We're at it's a corporate investment fund, but there are some interesting early stage managers in and around the ocean themes that I would advocate for that are touching some of these themes. And then there are growing pools of capital that are interested in more of the infrastructure investment. So depending on your kind of investment horizon and your risk profile, there are interesting groups in this space.
Excellent. John?
Yeah, I think fairly similar, I have to say. I think there's considerable choice in this area. Obviously undertake your due diligence like any good investor. But the one bit of advice I would give is when you're looking around, also demand a sustainable improvement as well, because I think you've got so much choice, you can have a return and get a sustainable return as well. That's a win-win.
Excellent, thank you. Olivia, you've been with us for the session. Please let me come to you as well for any final thoughts or advice you would provide to investors looking to get involved in the space, and then we'll close out.
Sure, thank you, Damien. Thank you once again for all the panelists for today's conversation. I will remember from our conversation that we still need to push in favor of awareness. And this is something that the foundation is very keen on. And it's a bit sad that we are still in the process of raising awareness. So I will remain optimistic and say, let's continue to raise awareness on all the opportunities and to stop thinking about the tensions, dramatic figures that are bearing on the ocean today. So we need to pursue opportunities of investment, of course, to try to push, and NGOs and foundations like us will do our best to try to convince investors to invest in the long term. And I will probably echo what Natalie has said. The most pressing challenge today is to invest on biodiversity and on nature-based solutions that can provide, key solutions for many of the various issues that needs to be tackled when answering the big, real question of climate and ocean conservation. So, in other words, this session was crucial, and we need more sessions like this in the coming weeks and months to make sure we can accompany investors on the right path.
And thank you very much. And actually, let me just say again, also, thank you to all the panelists. Obviously, for each of them, something you can follow up next. John, there is the research on Planet Tracker. Jamie, always looking for co-investors for some of the opportunities. Inna, we're looking forward to seeing you on the NASDAQ in terms of the listing there. And Natalie, tomorrow is hosting a session to go a little bit more in depth on these topics. So hopefully you can join there. From my side, and certainly from an Impact Agora side, we wanted to be able to convene this discussion to raise that awareness. But awareness at events and conferences always, for me, feels like a New Year's resolution, that you feel very good at the start, but then nothing happens a couple weeks later. So, which is also why Impact Agora, I would say, is very important, and we're hoping that many of you on the call will be interested in joining us in helping to build this out in order to move and convene more of the right players and the right opportunities to help to improve visibility and access to capital for the companies like EcoWave or with other investment funds that are actually on the platform now, and really raising the profiles of the intermediaries as well as the investment opportunities that are out there. So with that, I very much hope you enjoyed today's session. Hope very much that it is a starting point of a conversation and an engagement with all of us, and look forward to seeing you wherever and however we go forward. All the best. Thank you very much.
Thank you.